Hello, and welcome back to Curious About Bitcoin. I'm your host, Brian Rothenberg. Today, I wanted to go over a couple of graphs or pictorials that really basically changed my perspective about why I invest in Bitcoin. And my Bitcoin journey was very quick because I was familiar with these graphs separately, but not together. And then something clicked. There's going to be a number of the graphs that I'm going to show today. They're very easy. We're not going to be crunching numbers per se. We're just going to be looking at trends with them. So what I'm going to do is share my screen and hopefully share the right one over here. Uh, let's see, we will do this one. Perfect. And what we're taking a look at first here is the US M2 money supply. This is the number of dollars in circulation in the US. And you can see that this graph goes back to before 1960 and then kind of comes up through the 70s. We have different time periods represented here. I think these are different recessions that we had at various points in time. And, over time, what we can see is we went from, I don't know if that's $100 billion up to around $4 billion, during the tech boom in the late 90s. We got all the way to the great financial crisis, and we were under $8 billion in circulation. And these are everything from mortgages and loan debt and credit cards to the money that we have in our wallets and that we're spending out there, kind of all of those types of things. And we can see that, we did print some money pretty significantly here. You can start to see this line starting to go up more. But during the period from about 2010 to 2020, we really increased that, right? We almost doubled the money supply just in that period before we got to COVID, which is coming in there. And this was when we had that low rate, almost 0% period at federal rates throughout the US. And so basically what was happening here is we had low rates and we had low inflation because of low rates, but the money supply was expanding. And what that was doing was causing the price of assets to go up. So if you were invested in the stock market in this time, if you had houses during this period, the value of those things went up pretty significantly. So it was seemingly like a really great bull market for those investments. And then we get to COVID here, and basically one of the things that we had to do was print a lot of money to basically cover everyone and keep everybody, I guess, calm, for lack of a better word, during COVID. So that was the stimulus checks that everybody got. I think there were two $400 checks, if I remember. I certainly got them. I certainly cashed them. But there were also business loans, right? Like my company that I worked for got a business loan. I have a friend with a small business. He got a business loan so that you could keep employees on the payroll. And if you met certain criteria, those loans didn't even have to get paid back. So you can see in short order here, we went up again another like what is that? Yeah, $2 trillion. Sorry, these are trillions, not billions. So these are billions, and this is, 20,000 billion dollars. And then what we've seen since then, especially as we were going into 22, when we had the high inflation there, was this part of the graph where we kind of peaked there in March of 2022, around 21 trillion $720,000. And since then, we've had some quantitative tightening. So we've tried to pull in some of that money supply and not put it out there. That's what the Federal Reserve has been doing. But we can kind of see that things started changing in 2024, and we're going up and we're going up and we're going up. And if you look at this number here, which is 21.862 trillion, it's actually higher than the 21.749 trillion that we had in April of 2022 when we were just kind of peaking at high inflation there. And so what we expect to happen in the Bitcoin community is that we expect more printing to happen, because what President Trump wants to have happen is rates to come down and basically to weaken the dollar some so that we can do more things internally because the debt is so high. And if you look at this graph here, this is kind of what we expect to see. So I would expect that, if we zoom out here for a year or two, we're going to be past 24 trillion, maybe even 25 trillion pretty quickly once this happens. So this was a graph that I was familiar with, but I didn't really know how to think about it, right? I was thinking about it in the context of what a lot of people think, which is over time, if you put your money into assets or the stock market or things like that, things go up, numbers go up, right? If you look here, you can see that, in 1985, you're buying a house, average house in the US for under 100. And today it's, three times, four times as much. So that's fantastic that, all that happened. But if you compare that back to this graph, you went from, what is it, $2 trillion, we'll call it, $2.5 trillion in 1985 to $21 trillion here. So a 10x. And what we didn't see in housing prices is a 10x in that same period. We saw a 4 to 5x. So, that money is going somewhere and it's not going in your pockets or your assets if you are lucky to own a home. Not everybody's lucky enough to own a home. So then we have this other graph that I found tonight that I was looking at. And what this graph I wanted to use to kind of signify was what technology does to sort of the cost of things. And basically, what technology should do is lower the cost of things. So if I look back at, 30 years ago in terms of what I could do in my job and everything like that, I'm on phone calls all day long. I probably would have needed another person to schedule my phone calls, right? Now I've got an app for that. I've got a calendar that's online that people can check. I can easily move meetings and everybody gets an email about it, right? That makes us more productive. I can do more in less time. And you can kind of see that over time, what's happened is earned income as a share of GDP has been declining, right? And really where money has been going is number one, we've been printing it here. And then number two, we've been storing it in other assets, whether that's the stock market, which has gone up a ton. I should have had a stock market up chart today. We'll do that a different day. Housing, other things there. But really, we're seeing sort of this deflationary trend. And this makes sense because technology should help us be more productive. So the cost of things should go down. But we see the opposite. Things are more expensive. So where does that puzzle out? How is that happening? What's going on there? I know this graph here is a little small. Let me see if I can make it a little bit bigger. But, this is another graph that I saw as I was doing my search preparing for this video, where you can kind of see that, from after World War II up through about 1980 here, prices in terms of median family real income and then productivity output per hour. The workers were basically capturing that until 1980. And this chart is parity at 100 at 1980, where these two lines, intersect each other. And what we've seen since then is, median family real income has not been going up, but the productivity per hour is basically doubled in the time period since 1980. And, the other thing that's happening, this is median real family income. My grandfather was still working in 1980. My grandmother basically stayed at home for most of her career or worked odd jobs here and there part time, right? They were a single or a one and a half income family. And my parents were working two incomes my entire career, all of during the 80s and 90s and into the aughts and into the teens here. And, they're not seeing real family income increase quite as much, but the productivity that they had at the end of their careers was much higher than when they started their careers. And they had similar sort of jobs at the beginning and the end. So that's a really kind of important piece to look at. So this is something that for me just was information I knew in my brain, but I couldn't sort of figure out what was going on with it. And then, people were basically telling me that, the value of the dollar is going down when denominated in other things. I know that I, have this as a Bitcoin channel. I could do the same thing and maybe I'll try to do a search for it with, gold. But, the United States dollar against Bitcoin has been going down and down and down and down and down by 100% in the last 10 years. And I have a 10-year chart here. So dollar versus gold. Let's see how we do with that. Do we get anything to come up? I'll do this maybe in Google here. We're going to see a similar pattern, though, I'm pretty sure, as we kind of look at this. That's not the chart I want. Gold ounce to US dollar. I want US dollar over gold. So USD divided by gold. See if this one does it. I don't think I'm going to have it, but the value of the dollar against all of these other assets has been going down. And you see that again with the home prices. And that makes sense if you start thinking about it, because here we're printing more dollars. This is the denominator in a fraction. The top number is the numerator. The bottom number is the denominator, right? All of us have some kind of money. If we're in America, this is part of, the M2 money supply. That's what you've got. That's your numerator over a denominator. And what we've been seeing happen with the denominator is it's also going up as our numerator is going up, but sometimes the denominator is going up faster than the numerator, which means we have a smaller fraction of everything there. And what really caught my attention when somebody explained this to me, and I'll talk about that in a different video, is that Bitcoin is the opposite. With Bitcoin, the denominator is pegged to 21 million Bitcoin. Period. End of story. Forever. We haven't even gotten there yet. It'll be 2140 before we do, but we know that as we're denominating everything, that that's going to be the denominator. It's a finite supply. With gold, you can mine more gold. We can dig deeper. We can look elsewhere. We can try to look for gold on, bottom of the ocean or asteroids people have talked about if the price goes high enough. But with Bitcoin, there won't be the opportunity to do that. And that's really the key unlock here with Bitcoin. If we flip this and we do basically Bitcoin to US dollars, so Bitcoin over the US dollar, you can see the appreciation in the last 10 years is 24,000%. So that is basically 24xing, that's like 240xing your money on Bitcoin. You would have started with $453, $154, and ended up with 109, 430 today. We're pretty close to all-time highs, but a little bit below where we were before. And so, this is the asset that I now want to put all of my money in. This is how I want to store my time and effort when I work and I get money. I want to store it here for the future because this is only going to get more valuable, whereas the dollar denominated in Bitcoin is going to continue going down, right? So it was at 16 last August. Got another zero in there at this 91. It's going down and down and down and down, and that's going to continue here because we're printing more dollars into the system. So when this unlock happened for me, I basically within 3 days decided that I wanted to put my money into Bitcoin, and I did that. I will talk about that story a little bit more on another video, but I wanted to share these graphs and kind of go over, this deflationary thing that's happening with technology, the fact that this is going in the opposite direction because we're printing money, and then we look at the numerators and denominators of these various items. United States dollars over Bitcoin, we're printing tons and tons more of these, but this is a finite supply, right? So, that's what we need to really be kind of thinking about as we are, thinking about how we spend our money and what we want to invest in and all of those things going forward. I hope this video was helpful for you all. I hope that I explained it decently for you. If you have any comments on this video, please, put them down in the comment section. Please like and subscribe to the channel if you got value out of this. I will continue to create more content. I'm just starting out here and hopefully explain these things more. And if you have questions, I want to know what they are so I can try to look into them, both for my own benefit to try to explain them well for you. I hope to also learn and gain knowledge in terms of how to help others understand these complex topics because these are important topics. So with that, I wish you all a great day. Take care.